Monday, March 27th, the beginning of the last week in March. I always start with the stock market indexes, and this is market analysis, Stan Ehrlich. So the spider, SPY, is usually my first symbol with the stock market indexes. And as you can see on the left, I have a 60-minute or hourly chart. And the reason I am displaying the hourly data, which I normally don't do, is to show you that there is a nice bear trend line across the tops pretty accurately since about February 2nd, which is now almost 2 months long. Well, less 1 week. And that's fairly significant, especially since a few days ago, last week, we came up and bumped up against that line and pulled back down. Now, there are no new lows of any significance, and the market started to come back up again, including today's opening, which was approximately a couple points higher, and then it's pulled back. So now we're only up 3/4 of a point. It gapped up, and as I've said innumerable times, gaps are like a black hole in space. They tend to suck the price action back into the gap area. And that's exactly what happened this morning, and very, very accurately. So at this point, there's no gap to close on the spider. But again, we're going to look at the DIA, the Dow Jones, and the QQQs, and maybe the Russell 2000 in a minute. So no gap on the spider. It's free to go back up again, which is what I'm expecting. And stronger, quicker, the farther, the better. Maybe it'll make new highs, which are not that far away. They're only around 3 or so points higher on the day. Remember, a very modest net change, up or down, of 3 or 4 points is no big deal, usually. 5 or 6 points is more of a common size price change for the day. And if you're getting toward 8, 9, 10 or more, you're getting to a significantly higher or lower net change for the day. So, and that's, given the last 6 months of average to range, so to speak, or net change. Now, I'm expecting, since there's no gap to close, it opened higher, closed the gap, for it to start to rally and make some progress to the upside. If we can close above, and here comes some significant details, and I'm using the daily data chart here on the right for the moment, and it's giving me a little hand. There we go. The high so far is 99.10, 399.10, and the high last week twice was right around 99.5. So we came close to making breaking a little resistance area at 399.50, but didn't do it. Minor problem. Let's see this market go up to 99.50, get higher than 400, and close higher than 400, especially above 402.50. Now that is significant because that's the highest high that we have seen for weeks since the 7th of March. And it is not very far away from the highest closing price ever since you go back to February 22nd, 27th, February 17th, as a matter of fact. Then you've got a gap to close at 408. Now, 407.5 is the highest high we have seen since that gap, and that is since February 16th, a month and a half, less than 1 week, well over a month. So you're going to make, if we can get up to 408, stay there, close there, and I think we're going to do this soon, maybe this week, maybe next week, but soon. Then we're going to see the perpetuation of the bull trend, longer-term technical indicators pointing upwards solidly, and the expectation and likelihood that we're going to see more bullish progress as the calendar progresses. time passes. So what I don't want to see is for it to get below Friday's low, and that is going to be down in the ballpark of 389 and a third. I don't want to even come close to that level. The closer, the more worried I get that something more significantly bearish may be developing, and I am not expecting that at this particular point. I'm liking what I'm seeing so far from a bullish standpoint, price action-wise, etc. Now let's get to the DIA. Changing to the other tab and the daily chart on the DIA, and I'm getting a little problem here with my trade station at the moment. So we still have a minor gap to close between today's low and the high of Friday. We may still close out today, which probably will push the low of the day on the spider down a little bit more, not too much, and that's going to be okay. So that I can't rule that out. I said gaps are almost always closed. There are probably in the neighborhood of 10 or maybe 15% of the gaps that are created that are not closed. So that's a pretty high percent, pretty strong likelihood that this gap is going to get closed, but we'll see. If we continue to get stronger, we're going to start banging up against resistance area we already tested once and starting to get through it, which I'm going to like very much. Spider will probably lead the way up. Let's look at those two symbols. Let's look at the Qs, which have, in fact, been the strongest, the quickest, the best, and held the rallies better. And only just last week, we made new highs since August in the QQQs. Now, they didn't hold. In fact, we had a bearish engulfing ER sell signal and a red bar on the chart last Wednesday, which I'm a little concerned about because obviously that's supposed to cause the QQQs to go down. Well, they're not going to do it, or they're not going to do that by themselves. They're going to have to drag with them the DIA and the spider and the rest of the indexes as well. So is it going to work or not? I'm hoping that's a bad sell signal and that we're going to end up closing above the high, which will be 315.26 soon. But right now, guess what? We have a higher high than yesterday's high. We have a low that's not too far away from yesterday's low, which was Friday, and the same almost exactly as Thursday's low. And then you'll be starting to take out most of the lows of last week and make the red bearish engulfing sell signal, ER sell signal, start to work, which worries me. So since I don't look forward to that or expect that or want it, I'm thinking that we're close to the low of the dip here for the day, and we're going to start to work our way back up again, crossing my fingers. If you are bullishly inclined like I am, buying in this ballpark area or a little tiny bit lower would offer you a relatively low risk before you decided that you were wrong and you get stopped out with a small loss. The key here is small loss. You know you're going to be wrong some of the time. Don't take big losses. Golden rule. So we'll see what happens here, but I'm looking for this to turn around and start to rally back up. So far, this little dip this morning isn't doing any damage, a little concern, and that's about it. If it were to break the lows of Friday and Thursday and Wednesday's low, which is already below Tuesday of last week, that is going to be a little bit worrisome. And then you're going to start dragging the DIA too low and the spider lower than I'd like. And we could run into some problems. I'll have to make adjustments and change my mind. You can never make the market do what you want it to do. You always have to go with it. So if I'm wrong at the moment, so be it. I will make adjustments and get on the right track. But so far, I've been right for quite a while, and I'm expecting to continue, I hope. So let's look for a rally very quickly and follow through. Hey, I've got two brand new signals on Friday in the futures markets. The first one was cattle. and I talked to you about it. We got oversold. We popped up a little bit on Friday and on Thursday, and on Friday we had a bullish green ER buy signal, and look what happens the next trading day today. A very strong up rally, great signal, all good, nice profit, no problems. Except, hey, look at what happens to the RSI. We went from oversold conditions for several days and a good ER green buy signal to significantly higher on the RSI. When it gets up into my overbought territory, remember, I don't use the same as well as Wilder's 70 and 30. I use 25 and 75 for my overbought, oversold levels. And I learned RSI from Wells himself back in the 70s and 80s. So I'm looking for a little slowdown of this rally, which is great in the first day and a half of the buy signal. And ER1 is long from the middle or so of the range of Friday. We need a retracement back to those green dots in order to get into a new long for ER3. Didn't happen this morning. I've got a couple more days to potentially do that. Good news. Hey, next chart. We do have a great buy signal also in wheat on Friday. And it is doing just fine, not as good as cattle, but we almost touched the exact green dot for the mathematical formula that we use for ER3, which is, it's a family secret recipe. So anyway, a little joke there. It's doing great, no problems. And it's getting up to a little resistance, almost, not quite. I'm kind of expecting it to rally up to a minimum of 730 here, but that's just the beginning. If this is a double bottom, which it looks like it could be, we're going to break above that 713 and break out of the double bottom, challenge the resistance you got at 731, maybe back off from that a little bit for a short period of time, a day or two or three or four, and then plow through it on the upside and start chewing into the significant resistance area all the way up to 811. That would be a heck of a good trade from where we are right now at 700 point a half cent. So heck yes, that would be a very big rally, and that's not out of the question at all. But let's overcome some resistance levels first and see how well it can get through this 730 level, which would still be a very good rally in itself from 700 to 730. Next chart. Corn had a breakdown about a month ago under support, got oversold, rallied a little, and then broke down again to new lows for the trend at 606 and held because of being oversold, and has rallied back to resistance, went sideways most of last week, and now we're seeing minor new highs again, right up against a little bit, another small layer of resistance, and there is a possibility that it could come up even a little bit more. 650-ish is not out of the question. We're at 646-ish right now, so 653 maybe. But the trend is down. I've got no major reversals. I don't see any particularly great looking significant bottom formations. And I do expect this market to stop rallying and start to turn down and start to challenge the lows and make it down below the lowest lows we've seen so far at 607. So I am looking for this bear trend to continue. Ever since last summer, late summer, we've seen lower highs and lower lows. That's a very significant amount of time, and it defines basically a bear trend. Next chart. Natural gas continues to try to hold at the support level that we talked about all of last week, except we are right smack dab at that little blue line right now. It is beginning to violate that buy signal, which worked very well for a week and a half, and that offered plenty of potential profit. So the buy signal was good. It wasn't as profound as some of the signals that my ER signal trading system comes up with. The sell signal, for example, that was back in August 23 was the top of a bull market and the beginning of a bear trend that has lasted ever since August of 22, a year and a half. And it started at $10 and we're down to $2. That's a bear move. So now a buy signal might be part of a bottom building situation. Not looking like that at the moment because we're sitting on top of the support area exactly, a little bit lower, and a closing price in that lower area is going to start causing this chart to break down and probably have another down leg, which is what I think we're about to have. But I'm well aware that if it reverses all of a sudden and starts to rally, you're going to have the makings of a potential double bottom. We'll see what happens. That was natural gas. Soybean oil challenged major historical support last week. It bounced because it got oversold. I expect a little bit more bounce, but it doesn't change the fact that the trend is down. Something in the area of 56 to 57 plus should be a new short sale opportunity. Next chart, soybeans. Oversold, looks like it's going to rally a little bit. I'm not going to go into a lot of detail there. The rally should be about over in hogs. Trend is down. New short sale opportunity coming up. E-mini, major historical support held a couple of weeks ago. We look like we're on the way back up. I'm noticing that the S&P is now up 1.20. That's a lot better than 30 cents, but not good enough for any, significant comment, but at least it's starting to move up a little. Next chart. Sugar, no comment, bull trend. High-grade copper, neutral. Cocoa, overbought, watch out, it's about to pull back down. Crude oil did get oversold, is rallying a little bit, but now it's in a prime new short sale price range area, 72. Right in this area, maybe a tiny bit higher, 72.5 maybe. Could be, should be, where the rally is going to stop and turn back down. Trend is down. Next, bonds and 10-year notes. Extremely profound. Heading south at the moment. That means on a day-to-day, hour-to-hour, very, very, very short-term time frame. Rates are going up a little bit, bank to bank. Nothing particularly important or profound, but that's what it implies by this chart going down a little. No breakouts to the downside. We did test historical support, resistance last week. Overbought at the same time. No surprise, it's stalling out a little. But I think we're going to be breaking above that red 133 area soon, within, let's say, a week or two. And that is going to be a very, very bullish, very, very friendly to the stock market overall, bullish breakout, implying that rates may be at their highest levels for a while to come. Next chart, 10-year notes, basically same comment. We bumped against resistance and pulled back down a little bit today. Maybe it'll pull back a little bit further, but I am expecting the highs of Friday to be broken on a closing basis and for the trend to continue to be up again around the same time frame as the long bond, the symbol US, sometime in the next week or two. And I think that's going to be, well, I'll comment about gold, silver, and platinum. We caught the low of the gold, silver, and platinum market, all three of them, period. And that was weeks ago when I saw this bullish engulfing green ER buy signal and screamed bloody murder at the time. Turned into a minor double bottom, and up we went. New highs for many months, only a week and a half ago. Got overbought. No surprise, we had a pullback. We tried to make new highs, didn't do it. Pulling back today and a little bit on Friday. There might be a slight bit more downside dip here, but the trend is up. We're seeing higher highs and higher lows since essentially last fall, 6 months. So I'm bullish, gold, silver, and platinum, and here comes platinum. We bought the bottom of the break with the ER buy signal to the day. That's what this system is built for. We sold a high. We bought almost the low. We got a high here. We got a high here. We almost got a high here. what can I say? I'm bullish. This is working great. The RSI is neutral. Any point around here, price-wise, we probably will start to turn back up. Next is silver. We bought the bottom. It was the low on a 3-day double bottom formation. That's very, very tiny for a double bottom. Pretty much the minimum number of days you have to have. And we're overbought at the moment. So I'm not surprised if it stalls out, goes sideways, or a little bit lower before attacking resistance levels again. But I'm bullish on all three precious metals. They look fine. There's no major problems. Next chart, OJ broke the top of the pennant formation. I said so on Friday. We've seen more upside progress, but hey, now there's a problem. There's a possible double top. On both occasions, you've got overbought conditions. You cannot start getting back down below 233, 234, or it's going to look like a double top and you're getting close to a major downside breakout if that happens. Right now, a little dip down to 245-ish would be not unexpected at all, and then back up again. So dipping back into the pennant a little bit or to the top of the pennant maybe, and back up would be just fine. Next, heating oil. Remember, these two green lines represent historical support levels that are extremely important. We bounced off the upper line, which is at 2.32 already, and got oversold the same day. So we've come back a little bit, taking a week and a half to do it, and not really making any upside progress of any significance. So all of a sudden, I think this thing is going to start to attack the 232 and then the 217 level. Below 2.17, watch out. Major downside breakout, big move down, all of a sudden, major bearish breakout. Next chart. Live cattle we started with a few minutes ago, doing great. That's it for today. Thank you very much. Talk to you tomorrow.